All right. Hello, everybody. We are live on today's market open. It is 9:20 a.m. on September 15th. I'm very excited to be live today, and I'm happy that everyone is here. Showcat, Everclear, Young Buck Investing, thank you all for being here so early. It means the world to me. We have some big news in the acquisition space. Okay, some very, very big news. And that big news is that Adobe is acquiring design startup Figma for $20 billion. Let me just tweet this link out real quick. Give me 1 second. But that's a lot of money. That's a lot of money. They are paying 50 times ARR. Okay? 50 times ARR for this product, which lets you know how important this product is. Or at least lets you know how important the world or Adobe thinks it is. For those that don't know what Figma is, it's a design-based product. It is used massively in the technology community. Basically, if you're creating like prototypes or different ways your application is going to look, Figma helps you design it. Adobe announced Thursday morning that it would acquire design software firm Figma in a deal worth $20 billion in cash. Figma was founded in 2012, creates cloud-based design software. It competes obviously with Adobe's programs as well. Quote from the CEO of Adobe: Adobe's greatness has been rooted in our ability to create new categories and deliver cutting-edge technologies through organic innovation and inorganic acquisitions. The combination of Adobe and Figma's transformation will accelerate our vision for collaborative creativity. Now, you never heard of Figma. Yeah, some people don't know about them, but they are pretty popular. Now, for those that don't know, and I'm sure most people know, show the current stock price. That's exactly what I was going to do, Everclear. Whenever a company buys another company, the market gets pretty angry about it, even if it's good in the long term for the company. And the reason for this, by the way, there's another Palantir interview that came out today, bro. We are getting so much Palantir content. Like, I'm literally ejaculating every day with Palantir content. I hope that woke everybody up. If you were still sleeping, you better not be sleeping now. We are the company that gets acquired makes a lot of money, but the company doing the acquiring loses money. Adobe, let me pull it up correctly. What's the ticker symbol on Adobe? It's ADBE, right? Hold on. They are down 7% pre-market because they're losing $20 billion. I mean, that's kind of what's going on, right? Oh, ADBE. Okay. ADBE. They are losing $20 billion. So they went from 371. Oh, wow. They're down 12%. Wow. The market does not like this. Now, there's a couple of reasons the market might not like this. Number one, it's because the market doesn't like that they're paying $20 billion, which is 50 times ARR, annual recurring revenue for Figma, which it doesn't matter how amazing a product is, paying 50 times a premium. Your ARR is, it means you really wanted the deal to get done and you thought they were going to go public and compete against you. So you just wanted to stop that. And it's kind of like making sure that doesn't happen in the long term. Which ultimately means that shareholders think it's too expensive, or, you know, they're just mad that they're losing $20 billion and it's going to take a while in this economy. But that's right. But in this economy, it's probably the best time to do acquisitions. I mean, you probably weren't going to be able to get a better price for Adobe in the future. Give me 1 second, guys. Let me just get my bell. All right, have the bell ready to go for the market open. All right, so that's Adobe. We'll talk more about them later. Palantir down pre-market 1%. The new Palantir interview, I'll probably put the link later. It's if you type in Alex Karp Swiss Foundation, it'll pop up. It's him talking for 40 minutes to the Swiss. We've got Nvidia 131 down pre-market, Google down pre-market 104. Again, I'm getting very excited for Google as its 52-week low is 101. S&P is 392, so S&P is down. It ended lower than it was pretty much all of yesterday. 150 on Meta. Meta's 52-week low is 149. So Meta's getting very, very low as well. And that is getting me excited as well. It's 32 on Meta's 32 on the RSIs. I mean, it is screaming that it's cheap. It's trading 11 times EV to free cash flow. That's called cheap, especially for the trailing 12 months revenue, which is somewhere along the lines of $128 billion. Their market cap is 407 and they're making 128, which means they're trading at a price to sales of 3.672. Like, at some level, you're like, okay, do I really hate Facebook that much? But on the other level, the competition, the negative publicity, all that stuff, that's still there. Amid these 52-week lows are from the last 2 days. Exactly. That's the funniest thing. It's like the last 2 days there's 52-week lows. That's why I kind of don't want to buy, because I'm like, well, if we got the 52-week low 2 days ago, then maybe we can get a little bit lower, but it's there. Amid not going to close that yeah, I didn't even know they closed at 396 on Monday because I don't pay attention to Adobe, but yeah, it's definitely there. When you get to 100K subs, we need a life-size bell. Bro, if I ever get 100K subs and we're still doing the morning open, which I really hope that's the case in the future, absolutely we're having a whole freaking new studio to do these morning opens, bro. Like, I will literally be my own CNBC guest, just in a different way. Honestly, we might not even have a new studio. It might just be in this room. It might make it more fun that way. Okay, so we have 4 minutes till the market open. Nothing else crazy happened in the morning. Let me pull up CNBC real quick and see if I missed any headline. Oh, Kanye West is ending his contract with Gap and Adidas. It doesn't really affect the stock market that much, I guess, but that's news that's happening. Kanye's always pulling out at different deals, though, so it would be nice to have him make his own brand without having to use a major clothing brand and just do it himself. Roger Federer, Swiss tennis giant, announces he's leaving the sport. I don't know who's a tennis fan, but he's leaving, so that's happening. Twilio layoffs. Thank you, Jay Schwab, for this. Yes, so Twilio and also Patreon. Patreon had some security breach that had to do with child pornography. It's a big story to get into. They laid off like 80 people, their entire security team. Twilio laid off 20% of their work staff. And one could argue they were only doing this because of other tech companies doing this, and they kind of just went on the trend, given the nature of how the companies work. They trade off 11% of staff. Oh, by the way, I got a Bloomberg subscription again, so I need to use it more. I bought it 2 days ago and I forgot about it. That's why people don't buy Bloomberg subscriptions, because they forget about it. So now for the next 3 months, for $2 a month, I have access to all of this beautiful content. And then when they charge me $35 in 3 months and I forget to cancel the subscription, I'm going to like bang my head against the wall, because that's what happened last time. And I am going to realize I just paid $35 a month for some articles. So I need to remember to cancel the subscription in 3 months. DM me your Bloomberg. Yo, I don't know if you guys know, but Jay Schwab makes like $600,000 a year, and he's asking me for a Bloomberg password. This is how rich people stay rich. They don't pay money for Bloomberg passwords. Okay, so San Francisco, what is this? Sales strategy, blah, 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 blah. Best known for its direct-to-consumer text messaging services, betting on expansion to the wider market. Its workforce has jumped over the past year, going to 8,500 employees at the end of June from 6,300 employees. And just like Snapchat, they realized that's too much. This is 70 million to 90 million they're going to be saving. Twilio shares are down 73%. Kathy Wood has been loading up on this. Oh, we got to talk about Kathy Wood's buys after the market opened. Kathy Wood loaded the fudge up last night on some pretty interesting stocks. Some stocks that I'm personally getting ready to buy, even though they're Kathy stocks, because like it's getting time to buy some of these stocks. But yeah, that is happening with Twilio. Twilio is a major tech company, so that is definitely going on. Get the Bloomberg terminal. Yes. Okay, sure. By the way, you guys like this hairstyle? I tried it on last night on Late Night Stock Talks, and I thought it was really cool. I actually really like it, to be honest. I can't hear anything, but it's good that I'm not talking to anybody. Okay, market open is about 40 seconds. Bitcoin 20,000. Ethereum merge happened. Every person on the planet that cares about crypto was talking about this. I have no clue, nor do I actually give a flying you-know-what about the Ethereum merge, because like, why would you, to be honest? But if you care about that, then you care about that. They have merged. And so I guess that's going to allow more development on that crypto platform. I guess we'll see. 22 seconds till the market open. I'm interested to see how Tesla reacts. Tesla had a phenomenal day yesterday, ending at 301 or 304. Really was unfazed by whatever went on in the market. PPI data was good yesterday. CPI data a couple days ago was not that good. So ultimately, some stocks are doing fine. Some stocks are not. The broader indices are not. Facebook is not. Tesla is. All right. The stock market on September 15, 2022 is open. Wake your ass up. The stock market is now open. Tesla 302 down a little bit as soon as we open. A mid hair looking like Princess Lila. How much for Bloomberg terminal a year? It is 25K. So it's a bit expensive. AMD 76, Nvidia 103, Facebook 150. Oh, there we go. Facebook hit 149. Let's get Facebook to 140, man. Let's crash this MFR. Because I probably am gonna put $1,000 if it crashes even further. Because at that point, this is getting stupid. Palantir at 750. Where's SoFi? SoFi yesterday was at under 5. Now it's approaching 6, or a little bit above 6. So not bad for SoFi. Pinterest 24, Google 105. Again, Google I want at 101. I want the bottom on these stocks. I don't care. I want the bottom. Nasdaq 11,000 ends. It begins the day 76 points down. Bitcoin 20,000. Let's look at DNA. Ginkgo Bioworks. I want this under 3 as well. But this is $3, and we're going to be talking about this in a little bit. Look at it on the RSIs. It is below 30. When it's below 30, that is screaming oversold. And it's at 29.77. Again, the RSI is not the only index that matters, but it is one of technical indicators that is, I would say, relatively important in the broader scheme of things. Let's go to ARK. ARK's at 43. ARK is also 34 on the RSIs. ARK's not too crazy. Hair needs some barrettes. If you care about Palantir, it's pretty important to pay attention to what's happening in the blockchain space. Maybe. So Palantir offered their Foundry for Crypto. Palantir has not said anything about Foundry for Crypto in almost a year. I don't know how much. And if you're talking about decentralization, the decentralization of crypto is not the same as the decentralization of distributed servers that allow Palantir to be platform agnostic. And that's a mistake I made originally when I was thinking about I would actually like to hear your comment around why you think blockchain is so important to Foundry. Because that's what I thought it was, but I don't think it really is. Especially when Palantir is trying to sell software to government so that they don't die from dictatorial regimes. I don't know if it's the most important thing there. Also, hold on. Before we get into CNBC news, okay, so we have a couple things to do. First, let me address this real story real quick about Patagonia. Let me just introduce it to you guys for 2 minutes, and then we'll move on. We're not going to talk too much about it, but I just have to put it out there because it's about the broader market. It's about the broader business world. Patagonia founder, who is a billionaire, he's not a billionaire anymore. He's given away his company. He's put his shares, which were worth about $3 billion, into a trust that is a nonprofit that has the responsibility of making sure those shares, when they are sold, have profits that go to fight climate change. And he has officially given away the entire company instead of making the company go public because he believed that public companies have to have short-term benefits for shareholders at the expense of long-term growth and long-term health of the planet and the company. So he gave away the entire thing. It's interesting. I don't know if I would have done that. Dude must have done a lot of shrooms. Okay. I think he has a different philosophical thesis on business in general and life. And he's, to be fair, Patagonia has always been a company that has had a lot of respect and morals and values. So I respect the decision. I think I might have done it a little differently. I might have gone public, raised 20 billion, get liquid at like 4 or 5 billion for myself, and then do a lot of stuff with that money. Even if the market gets better, I would use that money to do a lot of other things. So, but different people have different, interpretations of this. Okay, ARK Invest Daily. Gabe, what's up? Shout out to you being in the chat. By the way, Gabe just started his YouTube channel. He posted a second video today. I didn't expect him to post a second video so quickly. He's talking about Facebook being undervalued or not. So everyone definitely go check that out. Okay, ARK trades. Block 100,000 shares. DNA Ginkgo Bioworks 199,000 shares. Too Simple 12,000 shares. And then in the other funds, she bought another Ginkgo Bioworks 129,000, about 300,000 shares just yesterday of DNA. DNA is becoming very, very, very interesting to me. I know I say that every morning, and I know I still haven't released my video yet on DNA. It's because I'm trying to actually do some due diligence on them like I did for SoFi. It took me a good month to understand them really well enough to speak on them. I understand Ginkgo Bioworks as a platform, and I understand it as massively undervalued at this valuation, even if it does not become some Tesla of genomics data. It could become $3 going into $15. I think there's a reasonable 5x there, just given the valuation. Now, it is a bit, the float is pretty big, right? So there are some concerns, obviously. There's a massive short report. There's a lot of issues, like everything, but I still feel like there is a potential there. Go public and then send more to charity. Yeah, that's kind of what I would have done. I would have gone public and sent more charity. All right, let's see what the talking heads are speaking about. I don't think there's any more breaking news. We covered Adobe. We covered Patagonia. Twilio layoffs. Where's Tesla right now? Let me just check Tesla real quick. Tesla 302. Tesla's doing phenomenal. It's figure. If you guys saw my video on Kathy Wood and Elon Musk yesterday, they are basically in agreement that deflation is happening more so than anything else. Okay, let's look at this. The Fed should not vary interest rates from normal levels. Let's see if this can happen. DNA and SoFi have a common thread that they offer a delivery platform for companies. I absolutely agree, and I love platform-based companies.
Having a big debate at this table, and Barry's been a huge part of it, about what the Fed should or should not be doing and where we really are in this economic cycle, whether we effectively are already in a recession or not, and whether the Fed is doing too much or too little. I'm very curious where you land on this.
I think that we've had 15 years, 14 and a half years of Disneyland that basically has destroyed the economic structure. Think about it, no interest rates. So anyone who's today 40 years old, like 40 years old with no experience in markets.
Right.
With zero, they don't know what time value of money is.
Okay.
So the Fed overshot by lowering interest rate too much. The first 100 basis points work, the second much less. At zero interest rate now, of course, for a long period of time, you are hurting the economy, you're creating bubbles, creating tumors like Bitcoin, creating
tumors like Bitcoin.
Yeah, or hedge funds that should not exist but have existed for 15 years.
Okay, we're going to dig into that in just a second, but keep going.
So now we need to go back to normal economic life. Here I see people are experienced, and you know, people with experience remember that there was at some point such a thing as a discount rate. So we had interest rate, time value of money, that your investment had to earn cash flow. All these notions escape the new generation.
Oh, so they need retraining. But I think the question at the moment is, they might have overshot on the downside in terms of lowering rates.
Yes.
Have they overshot? I mean, Barry's making the argument now that they've overshot the opposite way.
I think what they need is learn what economic, policy should be and what monetary policy should be. All right. You don't lower rates too much. You need to bring them back to a normal level. And not vary too much from these levels.
But are they at a normal level now?
No, 4%, I think. 3 to 4% is a normal level. And then you have room to go up or down from there.
But the argument I think that Barry's making, and I don't know if you got a chance to hear it, is that he thinks that we're already in a recession, that things are actually going to turn over in a terrible way, and that by continuing to raise rates, we're only going to make it worse and not affect the supply issue.
Okay, so
I think you should be going slower.
You have a dilemma, all right? You cannot lower rates. You can't, we've learned that it was a very bad environment for the U.S. economy, all right? You have transfers of functions.
Right.
You have
you did have a pandemic.
The financial, sorry?
You had a pandemic. Revenues went to zero.
And then also we had pandemic. But it was not the last 15 years were not good years, okay? So that generation of people that have the wrong.
Okay, let's stop sharing that because basically what he just said actually goes into the article that I want to share right now. And I think this article would actually help us understand what the guy was talking about. By the way, his breathing was very interesting. Ray Dalio does the math. The rates at 4.5% would sink stocks by 20%. Very, very interesting. He says private sector credit growth and spending to come down. Notes investors may be complacent about long-term inflation. Ray Dalio came out with a gloomy prediction for Ray Dalio has been very bearish, right? Have you guys kind of felt with his videos and stuff? He's been very like New World Order, things are kind of bad, all this stuff. It looks like interest rates will have to rise a lot towards the higher end of 4.5 to 6. 6% interest rates would be incredible. We haven't had that for a while. This will bring private sector credit growth down, which will bring private sector spending and hence the economy down. If rates are at 6%, Tesla's not going to be at 300. It's not going to be good. A lot of stocks are not going to be good. Dalio noted investors may still be too complacent about long-term inflation, while the bond market suggests traders are expecting an average inflation rate of 2.6%. His guesstimate is that this will be 4.5 to 5 with economic shocks. Dalio says the U.S. yield curve will be relatively flat until there is an unacceptable negative effect on the economy. And this would plunge equities by 20%. So rates surge, rising expectations for Feds, blah, 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 blah. If that's the case, the S&P going down 20%, we would definitely be at new lows, especially if it goes down 20% from the 390 levels right now. Admit you're wrong, Joel. I'm not wrong. If interest rates are 6%, Tesla is not going to be a $900 billion market cap. That doesn't make any sense. Mark can't say Tesla is the way, and you say exactly, Mark, but you but you don't answer the math. Like Elon Musk even knows that interest rates can't get that high for him to keep his company at $1 trillion, which is why he's flirting with Cathie Wood all day talking about deflation is coming. Because they want to propagandize a narrative that inflation is going to go away. I mean, and all power to him. He's got to protect his stock. But yeah, if we get 6% interest rates, I think, where are we at right now? We're like 2.75 or something. We're not at 3 yet, I think. It's not going to be good. Bring on the interest in lower stock prices. Yeah, if you're in the long term and you're like, hey, this is time to load up, then this is actually a good deal. This is not a bad deal. Tesla's the way. I love it. That's the meme now. Every time you're in my comments, that's what we got to talk about. Okay, let's see what else we can see on CNBC. First of all, is anyone buying as well? Put it in the chat if you have decided to buy anything. Interesting. Let's look at this. We're talking Apple. Where's Apple? Hold on. Let me go to the Webull real quick, and then we'll go into this video. Let's see how stocks are doing. Apple stock, I'm going to guess it's around 155. Am I correct? 150. Wow. I was 30 cents off. I'm getting good at this stock thing, guys. Now, I just need to get good at picking the stocks, but okay, 154 on Apple. So Apple is interesting to me. Apple introduced their iPhone 14s, right? A couple of days ago or last week. Really not any major innovation. I don't blame them for that because they're at some level, it's really hard to make this phone that much better. I think their next S-curve is either the car, the headset, or services. Services is the most likely out of the three. The car is probably a decade away. Headset's probably like a year away. But Apple is not as resilient as we thought it was in terms of peaching up to that $3 trillion market cap, because I don't think the market can justify Apple at $3 trillion right now. The multiple on it already, I mean, the multiple wouldn't be crazy, but that's a lot of money, right? $3 trillion. Zoom at $81. Again, Zoom on the RSI just above 30. Zoom is looking cheap. I mean, like, if you believe Zoom is cheap and you believe some of the other, like DNA is cheap, ARC is probably cheap as well at 43. Again, the macro headwinds might make it even cheaper. ARC got as low as 35 at one point. But from 150, it is at some lows. T-Doc, $32. I'm learning a little bit more about T-Doc. I'm not really that bullish on it. I've been reading some stuff about it. At the end of the day, they seem like some glorified telehealth company, and maybe they have a data advantage, maybe they don't. But we are ultimately going to see as well. Okay, so let's go to this video right here, talking a little bit more about Apple. And keep in mind, if we do get into a war with China, which I know is crazy to say, but if it does happen, a lot of things change about Apple, which is why actually they opened up a factory to make iPhone 14 in India. They have a factory. It's not the majority of iPhone 14s, but it is being made in India.
Sketch is urging Apple to rethink doing business with the Chinese chip maker that he calls dangerous. Let's welcome Senator Tom Cotton of Arkansas. In a letter to Apple CEO Tim Cook, Senator Cotton highlights what he calls the company's ill-advised plans to work with Yangtze Memory Technologies Corporation. Senator, thanks for joining us. I guess I'd just start by, you know, the old cliche, made in China. We buy a lot of things from China, and you know, it's a global economy. What specifically about this relationship troubles you?
Joe, we buy way too many things in China. I understand a lot of companies were encouraged by our government and administrations of both parties to make investments in China for 30 years. But we need to be taking steps to decouple ourselves from China, especially in strategic sectors like technology or semiconductors. Apple really needs to rethink this decision. YMTC is state affiliated and state subsidized. That's one reason why they've been able to grow such a large market share in these relatively low-tech but ubiquitous kinds of memory chips. But there's no assurances that YMTC is not acting on behalf of the People's Liberation Army and the Chinese Communist Party when it does business with companies like Apple. And this is not just my concern, Joe. This is a bipartisan concern of senators. Chuck Schumer, the Democratic leader in the Senate, Mark Warner, the chairman of the Intelligence Committee, have also called for YMTC to be hit with sanctions, same way that we did to Huawei during the Trump administration. I think it's vitally important that Tim Cook and Apple rethink this, not just for the sake of America's national security and the privacy and security of their customers, but also their shareholders. What would happen if they go into business with YMTC and it gets added to the sanctions list in 6 months or 12 months? I think this is very ill-advised, and I'd urge Apple to reconsider for all those reasons.
Okay. How many other companies could you throw into the same basket? And if I think memory chips and low tech, and we lead in technology here for chips and chip making equipment and intellectual property, but we do farm out a lot of the low tech memory type stuff to other parts of the world. We can't really. It's cheaper to get it from there. It raise the entire cost structure. What security concerns do you have that might be in these relatively low-tech memory chips?
Well, Joe, it's right that we do outsource a lot of the manufacturing for these kind of ubiquitous low-tech chips. They're in things not just like iPhones, but washing machines and dishwashers and so forth, but especially when they're in communications devices, both personal devices and enterprise devices. The risk is with the manufacturing occurring in China, we simply may not know what this company is doing at the behest of the People's Liberation Army or the Chinese Communist Party. And it could put at risk the security of all those devices. I'll just use one analogy. Look at what we did with Huawei. We didn't want Chinese manufactured systems running our telecommunications devices in the civilized and free world. Now, if we have these kind of chips running all other kinds of devices around the world, we simply may not know. There are many examples of China using its power over its own companies to implant devices or to use the technology they send around the world for nefarious purposes. That's happened, for example, when they built the headquarters of the African Union. Look at what TikTok's able to do with its data that it collects on so many users. It's simply not safe and not prudent to allow Chinese companies to manufacture these components for systems that may make it into the hands of Americans or in other friendly nations.
Okay, I mean, he makes a big point there, obviously. If China has most of our chips, right, like, there is something to think about in some of the things he's talking. You guys are clowning him in the chat. Dude looks like the teacher from Fairly Odd Parents. Someone said, can't trust anyone from Arkansas. Yo, I love the chat, bro. You guys are just... you guys just... Every time I put Becky on CNBC, too, you guys get too excited. Microsoft's $69 billion Activision deal is in the UK's crosshairs. So for anyone who bought AVTI stock, let's actually look at that right now. AVTI, right? Or ATVI. It's at 76. And what? The buyout is at 96 a share, I believe. MSFT ATVI buyout. I believe it's 95. Okay. So right now, actually, from 76 to 95 is an arbitrage. The question is if this deal goes through. Warren Buffett has picked up a lot of Activision, but I think 9 million shares or something. However, it is facing an in-depth probe in the UK after regulators said the deal could hamper competition. The Competition and Markets Authority said it decided to kickstart a longer review after Microsoft turned down the chance to offer remedies to address its concerns. The move was expected to after the CMA previously flagged concerns that the deal could lead to substantial lessening of competition. We're ready to work with the CMA on any next steps. Brad Smith, Microsoft president. This is interesting. I personally don't think it's going to stifle competition. I mean, I know that Microsoft owns Xbox and Activision has Call of Duty, like some of the biggest games. Obviously, it looks like it'll happen, but it might just make the industry better in gaming, especially if the world's moving to VR, AR. There's going to be so many more people doing so many different things. But maybe it does. Maybe it doesn't. So, admit you're missing this Palantir moon. Okay, I'm going to go to the stock price of Palantir, and if it's not mooning, Joel, I'm going to be pretty upset because your definition of moon might be different than my definition of moon. All right, let's go to Palantir. This is not a moon. I mean, it's nice. It's not that crazy. Tesla 305. Yeah, Tesla's 305. Look, Tesla's doing well. I can't lie. I don't know how they're doing well. Again, I have a share of Tesla, so I'm a Tesla shareholder. When was Tesla above 70 on the RSI? Oh, this was November 2021. They were so Tesla's all-time high is 414 now. So they have to beat 414 to be able to have a new all-time high. The market's relatively green as we look at this. By the way, Peloton co-founders left the company. That news came out a couple of days ago. They're gone, which is interesting. They decided to just leave. So they left. Spotify at 103.72. Where's Amazon? Amazon 129. See, when my dad bought Google at 115 a month ago, I was so upset because he bought it after the split. He was like, it's so cheap. And I was like, Dad, that's not how it works. Like, see, this is why I feel responsibility to learn about stocks, because obviously my parents are immigrants. They don't, like, I got them into stocks, but they don't understand the basic concept that when you split, right? Like, and you can't blame them. They're older. They don't get that. They don't pay attention to this stuff. But I was like, it's not cheap, Dad. He was like, it's so cheap. I was like, it's not cheap. But, you know, now he's having to deal with it. LOL moon. However, any green day is a great day. I agree. LOL takes a lot for Palantir to moon when your average share price is above 20. Well, that's true. Well, my share price is 19 too, so it's not horrible. Okay, let's see what else is going on with the talking heads and kind of see how. Oh, here we go. Let's look at the jobless claims. This just came out today. Let's look at the jobless claims. It's at 213K.
Litany of data here, so I'm going to go slowly. On initial jobless claims, 213,000. That is definitely below the expectations, and at least till we get a revision, that's 9,000 below last week. Last time we were down at 213,000 was a while ago. I would say we'd have to go back to the end of May to see a lower number. Continuing claims, 1,403,000. A very, very nice drop there. We're expecting a number closer to 1.475, so that's good news. Indeed, Empire Manufacturing, now this is September number. It is down 1.5, down 1.5. And even though that isn't good news, we're expecting down close to 13. And the big number lately has been, that was in April when it was down almost 25 points. And last month, of course, down 31.3, has yet to be revised. We haven't had a positive number there, well, since July. If we look at retail sales, up 0.3. We're expecting down 110. Very solid number. Strip out autos, and you can see that autos kicked in a lot to the headline because you go exactly the other way, down 0.3%. Strip out autos and gas, it goes flatline, unchanged. Philly Fed. Now, Philly Fed's always an important number. We want to pay very close attention. Minus 9.9. That's a big reversal. Last month, we went positive at 6.2. We're expecting a positive number. That is a disappointment. Import prices for August, month over month, down 1%. Less than expected, following down 1.1. Strip out petroleum, it's down 0.2%. Now, that was month over month. Let's look at year over year import prices. They are up 7.8%, 7.8%. But last month it was 8.8, darn close to expectations. And if we look at month over month export prices, down 1.6, we're expecting a negative number. It's about half what we had last look at, minus 3.3. And finally, maybe the most important on the pricing numbers today, export prices year over year, still stubbornly high at 10.8%, less than the 12.5 expected, and lower than the slightly revised 12.9% from last month. If we look at what's going on with treasuries, Joe said it earlier, 2-year note yields are definitely on track for what's going to occur on Wednesday of next week. They continue to make fresh 15-year high closes almost day after day. And even though all rates are up, 10-year note yields still haven't been able to take out their mid-June high yield close, just a whisker under 3.5%. Becky, back to you.
Rick, thank you so much. Excellent job breaking down all that information. Hey, Steve, you take a look at this. It basically says retail sales, consumer a little stronger than had been expected. The jobs market a little stronger than had been expected too. What's that mean for the FOMC when it meets next week? These are the numbers they're going to be watching.
Yeah, I'm trying to put it up, Becky, against the vision of the world laid out earlier today by Barry Sternlicht, and I can't find it in the data. Now, I think that's kind of Barry's point, that the data is old. It's not reflecting what's really happening in the economy. But when I look at the contemporaneous data, which is the jobless claims numbers, I don't see weakening there, which would suggest in the Sternlicht view of the world that employers are making a mistake in holding on to workers they don't need. I don't know about that. I see these consumer numbers, and they look okay to me. You know, a 4.2% decline in gasoline sales, which is actually a little bit less than expected. And a lot of that's going to be price as well. But you look at motor vehicles up 2.8% in July. Food service and drinking places, that's the one bit of service we have in there, up 1.1%. That's a strong number. You know, some negatives in there, health and personal care down 0.6%, but mostly I'm looking across at furniture and home stores down 1.3%. That's the real estate.
So overall, the numbers are not looking that bad, especially in the context of consumers being able to buy more things or feeling the confidence to buy. Glitch Life had a good comment here. Admit, please still, Gabe, he was right about inflation dropping off a cliff, which it did. He was just off by 1 month. I watched pricing of everything, and outside of rent, it's all down 10%, which means your argument, Glitch Life, is that next month we should have some really good CPI data at the end of the day and be able to see things in a different way. 75 rate hike this month. CPI drops hard for September, November 1st. No Fed rate hike. Market spike to make Dems Biden look good. That is a very possible thesis that I think a lot of people are expecting. But we also expected inflation to go from 8.5 to 7.9, and we were wrong. So, but that is a good shot. What Bacon said in the chat could happen. Like a pretty good shot that could happen. Not sure where everyone's at with autonomous trucking, but with Buffett's moves with Kodiak Robotics, things are gaining momentum. Maybe he feels it's a railroad of the future. I like Aurora innovation. The Cybertruck has been talked about a lot, I know, on the Tesla channels over the past couple of days, and the margins on that baby, people are arguing, are going to be 50%. I don't exactly know the reason why. I have to research it a little bit more. But if Elon can pull off even 35 to, I know some of them are already 30 right now, but if they do above 40 margins on Cybertruck, yeah, that's good. That's not bad. So that's definitely going to be something interesting about it. Adobe now down 19.5%. Let's open up Webull. Look, at the end of the day, I think they needed to make this acquisition because Figma. So I have a tech startup. By the way, if you did not sign up for it yet, I would really appreciate signing up. Link in my description. Please check it out. We are trying to change the way audio is discovered. It would mean the absolute world if people check it out. Would really help me, and I would help get some feedback on the product. I'm in the tech world, in the startup world, and Figma is one of the most prestigious tech startups that was in the private markets. Every company uses them. They built a phenomenal way for you to prototype designs, and it's one of those things where like it's just a good company. It's just one of those things where if you got to invest in them early at the seed stage, even Series A, even like pre-seed stage, you're going to make probably 100 times your money. And that's the benefit of investing in startups, because if you find that winner and you give them 25 grand, you make a lot of money. Having said that, Adobe needed to shut them down because they were coming for their lunch. Now, they wouldn't have destroyed Adobe, but they definitely would have made Adobe a bit more harder to compete with. And so Adobe is down a lot. Oh, this is the wrong one. Sorry, I'm looking at... No, is this the right one? This is the wrong one. This is Adobe, right? Yeah. They're down about 14%. So they're down 19% from Monday, down 54 points today. And it kind of had to happen. Apple 154, Palantir 782, Amazon, Tesla 305. Tesla's holding on, man. Tesla, the market likes Tesla. It's that simple. The market likes Tesla. I may buy Adobe. I use them every day. I would just be a little careful, Blake, because they're a bit, well, I would say they're richly valued, but now that they're down so much on the day, I would just think about them a little bit. I don't know anything about their fundamentals at all, to be honest. What is their market cap? $148 billion market cap. Price to sales is, where's their price to sales? Price to book is 10. Price to earnings is 23. So 23 is kind of average for tech. It's not expensive, but it's It's approaching that a little bit. Oh, it's weird. They don't have the price to sales on Webull. I don't see it. But regardless, it is. I don't know if it's that undervalued or overvalued right now. It is a good product though. See, acquisitions like Figma are what's going to keep them relevant and alive for a long time. So I think they had to do this at the expense of shareholder value, but you know they needed to do it. So, Biden announces $900 million for charging networks across the U.S. EV-related stocks are all doing well today. That's the news I didn't see. Biden $900 million. Let's Google that real quick. Yeah, hold on. That came out today. Let's look at that real quick before we end the stream. I know it's 10 a.m., so we got to get going, but let me pull that up. That explains your Tesla surge today. That's obvious. Here we go. Bacon, thank you for that news. In Detroit, Mr. Biden announced approval for the first $900 million in infrastructure money to build EV chargers across 53,000 miles of the national highway system in 35 states. The Great American Road Trip is going to be fully electrified. It's so sad that Biden's not like with Tesla at a conference doing this and he's with Ford. I mean, I know he has to stay with his constituents in Michigan and all this stuff and the union workers, but this is something that Tesla literally made happen. There is no electrification of the highway system if Elon Musk doesn't go through hell to make this real. So like you think Ford is doing this if there's no Tesla, none of these companies would ever give a crap about electrifying. So it's just sad that Elon's not part of this announcement. Because to say that this would have happened regardless, it's like, no, that this wouldn't. This would never have happened if Tesla did not become successful. All right, but that's good. That makes sense for the EV stocks. Makes sense. All right, everybody, I'm out today. Thank you so much for being here. 193 people. It means the absolute world to me. This is the one of the first weeks. I think by tomorrow, Friday, we're going to close it out with a morning live stream and a morning close and a late night stock talks every single night. So consistency is good. Sometimes if you're not consistent, just getting a week of being consistent helps. And last 2 weeks, I kind of had COVID, so I know it was rough, but we're back here. Thank you, everybody, for joining. A couple videos we have planned for today around Palantir and some of the stuff in the macro that we talked about in the news today as well. And then I'll see you guys on market close and then the late night stock talks around 10 o'clock tonight. Have a great day, everybody. It's September 15th, midway through September. I hope everybody's doing well. I hope everybody's going after their dreams, their goals, ambitions. We have another day to be alive on this planet, which really matters because one day we won't be alive. So I hope you take advantage of this day. And no matter what's happening, at least appreciate the fact that we're alive and we have the chance to live lives. Thank you, everybody. I'll see you guys in the market close. Bye-bye.